traders from across the globe. Welcome to Short-Term Trading Live with Oscar's 678th installment of this show. Traders, these videos are going to keep coming at you. Do not forget, before we get started, futures trading is risky and can cause substantial financial loss. If you do not understand this game, if you do not have risk capital to possibly lose, you should not be trading commodities. For you cowboys out there that don't mind riding those ponies, you know what I'm talking about. Traders, don't forget we got something tomorrow called FOMC, Federal Open Market Committee, or Fed Day. Tomorrow is the day that the Fed makes an announcement on rate decision, right? Well, they raise them, lower them, leave them unchanged. I can say this. In no way, shape, or form are they changing, touching, moving rates, right? No way, no how. They're not raising them. They're not lowering them. I do think this, however, the rhetoric that will come from the Fed statement will probably be long-term bullish for the markets or the economy. And certainly there should be some language about the possibility of interest rates somewhere down the road maybe going higher. I'm thinking that's what will come out of the Fed meeting. They will not be touching rates. However, traders, we do not trade on a Fed Day. We do not stick our necks out into a guillotine on Fed Day. We try to just stay, do our analysis, keep our powder dry, wait for the Fed Day to end, wait for the insanity to come to an end. Traders, I'm here to tell you whether the Fed moves rates or not, what will happen after the Fed comes out and does nothing. The markets will go, whoa, 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 and people will get stopped out in every position. And then 40, 50, 60 minutes later after the Fed announcement, things will calm down and go into the natural trend direction. So your best bet is to stay out of it. Now, because we know there is no possibility right now of them moving rates, we may have a trade tomorrow in the S&P. We'll see what happens. Come to my site. It's www.livewithoscar.com. Come into my free trading rooms, grab a free membership, and I'll be more than happy to tell you what we have planned. But remember, FOMC, Fed Day, Fed Decision Day, there are traders all over this world that are waiting and panicking and getting ready and building up, and here comes the Fed decision, and they're going to go nuts when the decision comes out. That's the way it works almost every Fed Day. You do not want to be part of that emotionally driven move, so stay out. And we'll do some homework together. Again, there may be a little setup. We'll see. So traders, remember the Fed Day. Come to my site. Do some homework with me tomorrow. Bonds. The bond rally is looking suspect. What does that mean? Traders, we just had a 3-day massive rally in the bonds right before a Fed Day in a bear market in bonds inside of a bear flag. A 3-day rally right before the Fed meeting in bonds. I don't buy it. I smell a rat. I think that rally is bogus, and it probably comes off after the Fed meeting. We are entering into and have already begun establishing a long-term short bond position for the future, for going out into the middle of this year. We expect the bonds to move lower as we mark time this year. So if you are a premium member in my premium room, you come to me tomorrow or late tonight, and I will tell you where we are putting on our bond positions. What else is on the board? Traders, the stock market remains bullish long term. Do not, I repeat, do not fall in love with the downside. If we have pullbacks in the S&P and the stock market while we're in a bullish market, you buy those pullbacks, you establish or try to establish a good pullback area throughout the day. When the market pulls back, you buy it and you wait for the end of the day. That's what a bull trader does in a bull market. Stay with it, buy the dips. The likelihood is we continue on for quite some time. So, traders, so we covered a couple of things on the board. I absolutely have charts I would love to show you. I will in just a moment. Before we go into the charts, don't forget that we have an OMNI camp coming up in 4 weeks. If you would like to come to Vegas and sit with me for a 4-day intense training session, you come to my site. Again, it's www.livewithoscar.com. click the link top right for OmniCamp, fill out the application. I'll call you personally. All right, traders, you know, we have, as I mentioned, 678 YouTube videos so far. If you have just found this video tonight on YouTube and you're not sure how you found it, just subscribe right there at my channel, and then you'll get an email from YouTube whenever we put out another video. All right, so where are we? I want to show you the charts. I want to show you what the bonds look like. I want to show you why the stock market remains bullish. And I want to talk to you about gold, traders. I've been coming out in front of this camera for a couple of weeks now and doing live classes at the OMNI Trading Academy at my site, telling you traders to get ready for what looks like a big topping pattern in gold. Well, it is starting to slowly trend now towards the downside. I had told you just a few days back, maybe a week ago, that we are looking for a couple of pieces of the puzzle to finally call top in gold. We have not gotten 100% confirmation, but since we have been telling you about it, the gold certainly has been coming off, and I have a chart to show you there. So with no further ado, baby, let's go look at some of those charts. Okay, OmniX, the first chart you are looking at is the March S&P daily bar chart. Represents the stock market. Two things you should notice right away. One, major parallel channel, which goes way, way back. You can't see where it's connected, but it goes way back. Beautiful parallel channel working its way higher. Very bullish channel. Then you look at the red channel. It's a secondary bullish channel. And traders, we seem to just bounce off highs, lows. Every time you get near it, you bounce again. Well, we bounced off of it on Tuesday. Wednesday, we expect the market to move higher still and maybe work its way all the way up to here. Of course, don't forget, we are in a bull market, and pullbacks of this nature do happen. So if we did start to pull back, I'd only expect to pull back down here somewhere and then right back up anyway. So we are buyers of dips, and we remain bullish in the stock market. Let's look at another chart. Okay, OmniX, here we go now with the gold chart, the same chart I've been showing you for a couple of weeks now. Very toppy looking here, traders, if you ask me, and we are below the Omni average. And traders, last time we got below the Omni average, it did not last very long. This time we're below the Omni average, and we have our eyes peeled because it is a completely different situation. The last time we got below the average, we were down here. This is a different situation. We've had a major, major rally and a crown-looking top, and now we are below the Omni average again. I say we continue on the downside, but we will be monitoring this very, very closely. Looks to me like the top is likely in. Again, I cannot officially call top until we have our confirmation, but since we thought the top was in somewhere up here, or at least since we started to get clues that the top is coming, it has dropped quite a bit, traders. We've come all the way down to here so far. So let's see what happens. Let's stay fixed on this gold. Let's see if this is a topping pattern. I will continue to update you with the gold situation. Okay, traders, you are looking at a daily bar chart of the 30-year T-bonds. This is a well-defined bear flag. How can you tell? Bear market. Flagpole, go into a flag. The next move that should happen is when you break out of this flag, you break out to the downside. Here is what I find suspect. You had a big down move, then sideways to lower, and 1, 2, 3 major rally days that take you almost to the top of the flag the day before a Fed meeting. The day before a Fed meeting, you get these 3 bars that take you almost to the top of the flag. I say that is a sell opportunity. We will certainly find out. As you know, we are long-term bearish in these bonds, and we expect, even if there was a rally, for us to sell into it and later on have a big drop. But I do not think we'll end up here. I think that we fail at the top of this flag and start our descent. We shall see. Of course, that is what stops off for. Traders, longer term, however, the weeklies look bearish, the monthlies look bearish, the daily looks bearish, the bonds here look bearish overall going forward in 2011. So, traders, you've seen those charts. There's my technical argument for why the gold is starting to really look toppy. Again, we have not called official top. It could easily blast off, but we're getting closer and closer to being able to say, hey, that gold's officially a short. Let's go. So keep your eyes on it. We have been putting out short recommendations every day, just not really participating until we get our signals. That's the goal. In the S&P, remain bullish. Do not fall over the downside. Buy the dips as they come. Be brave. It is a bull market. And traders, don't forget it is Fed Day. Tomorrow, we mostly do nothing. We will do analysis. I'll try to hold a class. I'll hang out at the trading rooms with you guys. Let's see what the rest of the market's doing while we basically almost have a day off. Again, we could sneak out one little trade. We'll see, but let's not talk about that for now. Again, I usually do nothing during Fed days, but could you expect them to move rates? Not a chance. Now, speaking of the year 2011, what bonds will do, we have not given you the OMNI 2011 call yet, but it's coming. Traders, again, I went out on negotiations with the station today to see where I can present this call to you. It is coming soon. It's a little bit bigger job than I expected, but hey, I've been having a good time getting this thing set up. I cannot wait to give you that projection. If you remember, traders, and I know I've gone over this, but once I stepped out of the trading pits in 2006 from being a really short-term trader, I started applying my knowledge to long-term projections. 2007's long-term projection was picture perfect, just about to the exact number of 1577. Then we gave a long-term projection for the crash in the stock market down to 668. We were basically there within 2 points. It was perfect. Then for 2010, OMNI gives out a call to reach 1290, and we get there 5 days or 10 trading days into 2011. We trade 1290. OMNI couldn't have been more perfect. I have a call for you now for 2011 where the market should go before the year is over. I am not saying up, down, or flat, but we do have our projections, and we will bring them to you live on television as soon as we're set up. Traders, hope too much time doesn't pass, because I would like to at least get it out there so that everybody knows if they should be long, short, or indifferent for the year 2011. For now, we'll get it done as soon as possible. All right, traders, I'm getting out of here. I want to go back to my charts. I want to go back to my spot. I want to go back to my site. I want to get off this camera. So I'll see you on the X at the site. Give me a call time day night, 702-629-4755. And as always, keep your emotions out of trading and always place your stops first. Never trade without them. Traders, if you'd like to keep your emotions at bay, there's something that you can say to yourselves over and over again, especially when you're in a bad position and you cannot take the pain. Say this to yourself because it helps, and you know what that is. Stop emotions are out. Yeah, baby. Yeah.
Always remember, futures trading is risky and can absolutely result in substantial financial loss. Traders, trading futures is not for everybody. It's not suitable for every trading account. And as always, past performance is not indicative of future results.